Okay, just checking that that everyone can see the screen I've shared.
Definitely.
Yep.
Okay, perfect. Excellent. Okay, so for some of you that that haven't heard me before, this is my background. My name is Sachin Maharaj. I've had a very long career in banking, spending about 33 years. Prior to that, I was a chartered accountant and worked for a company called Pricewaterhouse. Most of my experience has been in global markets, and that has given me a lot of insights in terms of dealing with the RBA, with EPRA, with ASIC, and most of the other regulators in the market. And hopefully using that experience, I can give you some frank views, my own forecasts on exactly where I think the economy is going and how the property market is impacted as a result. Okay. So when you look at the property market, as most of you would have found out in the last 12 to 18 months, that if interest rates are going up, that does not necessarily mean that house prices start going down. And I have been using this graph here, which is my top 7 points on what really moves the needle when it comes to property prices. Okay. So, and it is in some sort of order. So my first one is supply and demand. Just like any commodity, whether it is property or cars or anything, to be honest, it is economics 101 tells us supply and demand. If you've got too much supply and not enough demand, prices will go down. Simple as that. You don't have enough supply and there's too much demand, the opposite happens. Until such time as you have what we call equilibrium in economic terms, and then there is a normalized property market, okay? The second one there is interest rates and affordability. So on that first one, we all know that right now, the biggest factor is demand is increasing when supply is low, okay? That's what's causing the prices to go up. Second one is interest rates. So we saw interest rates go to record levels, and affordability therefore became a lot higher, and people could therefore borrow more, and that created more demand, and that demand at that time lifted property prices. And we saw that just post sort of around the COVID time. 2021 was the big year when we saw a huge jump in property prices. And that was fueled mostly by interest rates. The key factors, and we all are very well informed now about inflation, and I'm sure all of you are watching every month what the inflation numbers are going to be, what the petrol prices are, and so on, right? And the other one that the central bank always looks at is the wages growth. We want to make sure wages growth is good. There are a number of other factors as well which are not on this list, but they make up the decision on what they do with interest rates. And we talk about that, retail sales, for example, the GDP growth and so on. The third one there is a regulator. If there is appetite by banks to lend money, then you know we have got a very healthy property market. If EPRA tightens the screws further, and they are the key regulator for banks. I've been dealing with EPRA now for nearly 30 years, and I can tell you that they know very well how to tighten and tighten the screws when it comes to lending policy and a number of other policies as well. So it's important that, I mean, one factor, for example, as most of you would know, is the lending criteria when it comes to looking at ability to pay. They increase that buffer to 3%, okay? So 3% on the variable rate. So if the variable rate happens to be 6%, they will look at your ability to pay at 9%, which is very, very steep, actually. So these are the type of things that the regulator can do to actually influence what banks are able to do. So banks, when you have a very healthy banking system, and you've just seen Westpac release their profits, which was up. They're all in the 7 billions now. You just saw yesterday NAB, their results are up as well, 7.7 billion, I think, from memory. So banks are reporting very healthy profits. a lot of the bank's profits actually comes from the mortgage book. Okay, so for those of you that are not working in banks, you may be interested to know that half of a bank's assets, 50% of an Australian bank's asset, particularly the big four who make up more than 80% of our mortgage market, is in residential mortgages. Okay, this is a phenomenon that is mostly just related to Australia. So if you go to other countries and you look at what portion of a bank's assets are actually residential mortgages, you'll find that it is a significantly lower number than we have in Australia. So it's bread and butter, right? And any contribution to profit is massive from the residential mortgage books that our banks have. So the health of a bank in Australia is very much determined by the health of the residential mortgage book. We'll talk more about that in a minute, because that's very important. We need to have a healthy economy for property prices to grow. We want in these two key measures have to be in check all the time. One is GDP, which is your gross domestic product, which is your economic growth. And the other one is unemployment. If unemployment spikes up and GDP goes down and we get into negative territory, then the economy is in a bad shape and people will not have the confidence to enter the property market. Indeed, there will be a lot of sales of properties and not enough buyers. So these two things need to be in good shape at all times, okay, for a healthy property market. That's why number 4 is very important. Now, I'll point out that unemployment, the last time we had a real recession, and I'm not counting the one that we just had during COVID, it was a very short recession. Two quarters of negative growth is a recession, okay? We had that briefly for during COVID. But the last time in the early 80s, and I've seen a number of property cycles in this country. So I was here in 1981 and 1982 when you actually had unemployment spike up to a very large number. Okay, right now we all know unemployment is at around that 3.6. It's been steady, 3.7, 3.5, 3.6. And that's very, very, very healthy. It's almost at record lows. So when unemployment was at 7.5, for example, then it is impossible to find a job, okay? And if GDP was negative, which it was around at that time, the last time we had a real recession, we had big issues. And the issues, if these two things are unhealthy, what happens first is this number 6 happens first. You start getting a lot of delinquencies. Delinquencies are when you, sorry, it's a banking term, but delinquencies in loans is when you haven't paid your housing loan or investment loan for 1 month, then 2 months, then 3 months. And then the bank actually comes and says, I'll take your property from you. You're unable to pay your loan. And then they do what's called a mortgagee in possession sale. When a mortgagee in possession sale happens, then whoever's the highest bidder, they normally buy the property. And if the bank recovers it's as much as it can on its loan, if something is left over, it goes to the homeowner. So what was predicted in the early part of this year by a lot of economists is that you're going to see a high level of delinquencies and the banks are going to have a lot of write-offs or provisioning for bad and doubtful debts, okay, in the old term. And that was because interest rates have gone up so much and people are used to this and they're not going to be able to pay their loans. And they're just going to say to the bank, you can come and take my property, I can't pay my loans. That did not happen. And for every seminar and webinar that I have done in the last 12 to 18 months, I have been saying all along, delinquencies are not going to be an issue. Banks are not going to lose money, okay? And that's exactly what's happened. And the reason for that, okay, the main reason for that is this factor here. It's the unemployment. If people are employed, they're going to pay their housing loans. It's just something I have seen in Australia for the last 42 years, okay? People will pay their house. They might not pay them a car loan. They might not pay their credit card. They might not pay their personal loan, but they always find ways, get a second job, work overtime, send their partner to work, do all of the things that they have to do, put the roof over their head. So this number is very important when it comes to looking at indicator for, where property market's going to be. Are we going to, so there's economists who come out and Northern Hemisphere equity analysts that come out from UBS and JP Morgan and Goldman Sachs and say, property prices in Australia are too high, they're going to fall 25, 30%, okay? And that makes headlines. They do not know what they are talking about, because for property prices to fall 20, 25, 30%, you need this to be very unhealthy. For that to be unhealthy, you need this to be unhealthy. And I'm not talking about, we were at 5% unemployment before COVID. Did that cause an issue? No, 5% is still very healthy unemployment number. What the government wants to see, though, is that unemployment number to actually go up. It's stubbornly low. It's still at 3.6. Okay, they expected by now, the Reserve Bank expected unemployment to be over 4%. They expect sometime next year for it to go to 4.5%. It's not happening. It's not happening. And that is annoying, actually. Okay, I know it sounds really stupid that I'm going to say that people should be firing staff more so that unemployment goes up. And then the Reserve Bank is going to say, well, that's one indicator why we should not actually now put interest rates up. But it's not happening. So keep that on the back of your mind. Number 5 there, I won't dwell on. But it is important because the government, the local government and the federal government are spending significant amount of dollars in infrastructure, providing incentives, doing all of the things they have to do to actually make sure that there is sufficient employment and there's sufficient GDP. So you're probably wondering, what is the right thing, right? Do we want a healthy economy, or do we want things to go a little bit pear-shaped? So even to the extent, because GDP, the last quarter GDP was actually really strong, not really strong, but it was positive 0.4% for the June quarter. One of the big factors why it was positive in the June quarter was because we actually had a lot of government infrastructure spending, investments, okay? That keeps unemployment, that gives people money, people spend money, and it all hums, the economy hums away, right? You probably had Chalmers, our treasurer, actually last week say, maybe we should slow down our investment in infrastructure, slow it down so that the GDP suffers. So that might then help interest rates to come down. As stupid as it sounds, this is the thinking process in this whole thing, okay? So some of these things are interlinked, but all of these factors have a play and then the last but not least is the global factors. And you all know how much the Ukraine war actually had impacts on inflation, how much the post-COVID era had impact on inflation, and so on and so on and so forth, okay? Foreign exchange rates are very important as well. These are all sort of the number 7 because they all collectively have some impact to some of these numbers up here. But also if foreign exchange rates, for example, are really low, which it went down to 63 cents recently against the US, then you have got more buying power for people who are wanting to buy properties here. So indirectly, that has implications on our property prices. Okay, I won't dwell on this, but we will go to the next slide. So this one actually showing, sorry, it's a very busy slide, but all I want to show here is some of the recent numbers. On the left here are things that are negative for the property market. On the right here are things that ideally probably positive for people who own properties. So on the left here, interest rate went up on Tuesday. Pretty much all economists, maybe 90% of them said, yes, it's going to go up. I think, to be honest, my heart said, it probably will go up, but my mind was saying, don't do it. And the reason why I was saying don't do it is because I think people are hurting already, businesses are hurting already, and maybe they could have paused for a little bit longer. But if you look at the data and just base it on the data and the Reserve Bank's priority. So the data, as I said, unemployment is at 3.6%. Then, Lord and behold, last week, the retail sales numbers came out, and I thought, retail sales maybe not as strong. I was wrong. Retail sales are still wrong. Still high. So people are still going to shops and spending money, going to clubs and spending money and doing all of the things. The car sales are up. They still got money to go and keep buying. So please, if you're going to keep doing that, don't expect interest rates to start falling in a hurry. Okay. So these numbers did surprise. Our GDP surprised me because it was the government spending and the infrastructure spending and those things that actually caused GDP to go up, even though GDP per capita. So if you look at a household and an individual, their cash flow has gone negative. Okay, year on year has gone negative. So it is costing them more in every sense of the word. The savings is less. So GDP on a per capita basis is negative. But on a total country basis, it's positive because of all the corporate and government and other spending that is going on and consumption that is going on. Included in that are things like, and now there is a bit of a inquiry on price gouging. So every bill you get, whether it is electricity, that's because of the climate change issues and renewables, but then you get your insurance bills, and I'm sure everybody listening today, when you got your insurance for your house or for your investment property or for your car, they've all gone up, and they haven't gone up 5%. They've gone up anywhere from 20 to 25% and more. So it's a bit of price gouging going on as well. So these factors don't help. And then if you look at what's happening with interest rates overseas, US Fed has paused. Okay, they have a range, the 0.25% range, that stayed the same. There is a lot of talk. If you listen to US news, there's a lot of talk now. They're saying the next move in the US is more than likely going to be down, not up. UK have also paused. They're at 5.25, but they're significantly higher than Australia, still 4.35. So they both might pause now for a while, and the next rate could well be down, but it could take a little bit longer for it to be down than what our RBA is thought, and what I personally thought as well. I thought that the inflation number would be further down by now, but it's stubbornly high. Okay, and these are some of the factors that I've talked about are causing it to be high. US inflation, okay, is at 3.7. It peaked at 9.1, so definitely it's come down a long way from 9.1. Australia inflation, surprised, we went from 4.9. We peaked at 7.9 in December last year. We came down to around 5. Now we ticked up a little bit. That tick up did not help with the decisioning for the interest rate. Okay, so I think the RBA governor at the end, doesn't matter who is at the helm, they really did not have a lot of choice. They saw that the trend is still down, but this blip is not good. Retail sales is not good. Unemployment is not good. So when you combine all of these things, she had no choice. Okay. The other factor here is we've got some recessionary fears, or at least stagnation fears in some of these economies. Okay, they're big economies as well. On the right side, I won't go through this. These are all the things you know. There's a rental crisis. So if you're a property owner, it's positive for you because rentals are just going up and up and up. And we'll show you the vacancy numbers in a minute, but that trend is just continuing, right? You can't solve the housing crisis overnight. It's not possible. That's the supply and demand thing. They're not going to turn the tap off on immigration. So more and more and more people are going to continue to come into this country. And I'm sure most of you know why we can't turn the tap off. Okay. So the main reason is we need population, young population to come into this country to work and pay taxes. And the reason why we need them to come here and pay taxes is because we have roughly 400,000 people every year for the next 10 years going on the pension. I'll say that again, 400,000 Australians every year for the next 10 years are going on the pension. That is a massive, massive cost. So that over 10 years, that's 4 million people. So you need to get people who come here, who are young, who work and will be working for the next 25, 30 years. So the government can fund those pension payments. Okay, that's very important for you to know. The other thing is when population comes here and we need skilled people to come here and more skilled people to come here to make sure our GDP grows, so that they spend money, and all of the good things that go with that. So I've talked about unemployment, talked about migration, and I've talked about GDP as well. So we won't dwell anymore on that. What's making news? Listen, I haven't pasted too many new things on this slide, but the key thing here is, unemployment still, as I said, very strong, but the home prices just keep going up. Every month now we look at the numbers and it's up again. Perth over the last 3 months has outpaced any other part of Australia in terms of both property price increase and also rental vacancy decrease, okay, and rental prices going up. So there is the biggest shortage, if you like, in our whole country is in Perth. And that is obviously fueled by significant population growth and an acute shortage of properties. So they are faced with that problem, okay? Now, I won't dwell on this screen very, very much, but I just want, for some of you who may not have been in Australia for very long, I just want to say one thing, that this is the cash rate for since January 1990, okay? So we're going back quite a bit in time. 30 plus years. So we were at 17%. We were at 17% cash rate. It had a big fall here. Then it's been mostly around that 5%. So the average for the last 30 odd years, okay, is 5%. This coming down here is a very short-term phenomenon, mostly caused by COVID. Okay, so that this is a blow up of that for the last few years. So we came here and then now we are up here. Sorry, I'm using an older graph, but everybody knows where the cash rate is now, 4.35. Where does the RBA want the cash rate to be? Between 2 and 3%. Ideally, right here where I've drawn this line. Okay, that's where they want it to be. Average has been at 5. So don't forget, the average over the last 30 years has been at 5. So I ask all of you, is this a high interest rate environment that we're in? Absolutely not, okay? Absolutely not. So when all of these so-called experts came out in the last 12 months and said, oh my God, interest rates have gone up, we are going to have a major, major, major fall in house prices now, a huge correction. Yes, there was a small period of correction which you had to have after a big 2021, but then it started going up again. And I predicted an 8% increase in property prices in 2023. That prediction was made in September last year, and I can bring up the graph for those that want to see it, but that was based on history and the experience of history, okay, and the demand that was going to come from overseas. A supply and demand issue, not just interest rate. 7 factors, remember, not one factor that causes the needle to move on property prices. So again, apologies that I haven't upgraded this graph, but you all know that inflation is at 5.4% now. But see, it's been up there for back in those days. Now it's very much the trajectory is down, and you will find that we will be below 5 again very, very shortly, because there's a lag effect with the pain factor. Okay, the people are feeling the pain. They are very slowly tightening their belts, but you will find over the next 3 to 4 months, people will tighten their belt further and say, we can't afford this. particularly the non-essential goods area. You will find there'll be less spending in that area. This is your Harvey Norman and your JB Hi-Fi type purchases. So we should see that come down. Now, where to from here? So we've done one more after a bit of a pause. Do we follow the US now and not do any more? Do we follow the UK? It looks unlikely that they're going to go any further. Or is there one more left? Okay. A lot is going to depend on all these factors that I've already talked about. Inflation, GDP, retail sales, particularly non-essential goods, the unemployment number. So we want retail sales to come down. Okay, so please, everybody listening today, do your part. Stop spending. Unemployment, we want that to go up. That's not in our hands. Okay, but they want to see that figure get closer to 4%. Wages growth, well, we've had a bit of wages growth. The problem with wages growth is it causes inflation because wages grows and then people go. And so partly government is responsible. They've increased the wages for our essential workers, the teachers and the like. So, and then the next one is, if one of our major economies goes into a recession or what we call stagflation, where you basically just go sideways, nothing much happens, or another event. So far, this new war that's going on has had very little impact on the oil prices. Oil prices spiked from 85, crude oil prices, 85 US to about 95 US. They're now back to 85, and it hasn't really gone up because of this war. If this war escalates, and we don't know what holds tomorrow and the day after, then potentially it could have some impact. So we're living in a time where there is a lot of unknowns, okay? So the RBA, I think personally, are going to pause and they want to see the fourth quarter numbers before they will do anything else. And so I'm expecting that until February next year, nothing will happen. And then all the numbers for the December quarter will come out, and then we will see where we go from there. And I'm crossing my fingers and hoping for everyone's sake that all these numbers that the Reserve Bank wants to see comes to fruition to some extent, okay? Because I still remain with my prediction that we will see the first fall in interest rate around July next year. Okay, I've been saying that for the last 6 months. I am still sticking with that and hoping that I am correct. Okay, and rest assured, the very first variable rate decline we're going to see is going to cause the fixed rates to come down about 0.75% immediately. Okay, so I'll say that one more time. The first 0.25% fall in the cash rate, which means the variable rate. Fixed rates are not set by the Reserve Bank. Fixed rates are set by the money markets. As soon as they see that change in trend, they know that trend is not going to be one interest rate cut. It will be 2, 3, and 4. Okay, very, very quickly. So fixed rates preempts the future. So fixed rates could fall. The first 0.25% fall in variable rates means at least 0.75% fall in the fixed rates. Okay, keep that in mind, because anybody listening to me today, please do not go and fix your interest rates now, whatever you do, because come second half of next year, you will really regret that. So very simple graph here on property market. If you have economic growth, that brings jobs growth, that brings wages growth, that brings population growth, that brings increased rental and buyer demand, and that increases the property price. This is not rocket science. You all know that. Okay, now we're going to talk a little bit about why I think, and my team have done, so we do a lot of research and we bring to our audience where we think you should buy at a particular point in time, and and the reason for that is where you're going to get the biggest bang for your buck. Okay, so I'll give you some examples. 2 years ago, we were all for Southeast Queensland. And we pushed Southeast Queensland so strongly. And a lot of our buyers bought at sub 500,000. Okay. So somewhere around that 450 to 500,000 was the sweet spot to buy a house and land package in Southeast Queensland. All of those buyers now are sitting on a very healthy profit of somewhere around $200,000 to $250,000. We then stopped and we really said, okay, I think 700, 650, 700 is a good place, but let's stop there. Let's find where the next big value proposition is. And we went to Adelaide. Went to Adelaide because you could buy a 4-bedroom house and land package in Adelaide about a year ago for around 500,000. And I said to my team that this is not sustainable. And I can see that within a year, this price will go up to about 600. And we'll see the same thing that is happening over there in Brisbane. So we did, and we had that strategy. And all of those buyers, again, are now, some of their homes are not complete yet, but they're all sitting on about $100,000 profit. And then we said, well, it's now 600,000, so we need to move on. And so we have been pushing Perth now for about 3 months. And the last 3 months, we have seen Perth as the highest property growth market in Australia. Some of you may not realize that the population growth in Perth is on a per capita basis, population growth is actually the highest. Okay, percentage terms, I should say. In percentage terms, it is one of the highest in Australia and predicted to be one of the highest in Australia for the next 10 to 15 years. So Perth, so if you're going to look at the cities, the big cities, okay, I'm not talking about Darwin here. Darwin doesn't figure. But all of the other big cities in Australia, and you look at where the median prices are, and that's when Perth sticks out, okay? And so we did 3 months ago, we did some dual key sales. Very quickly, they were wiped out because nobody would offer those prices again, okay? There's no stock. You look for a dual key now in Perth, you can't find one. And we were selling them for around 650 to 680. And the rentals were about 900. Now, the other factor with Perth now is that it is a growing city. It is not a single, it's always been associated with mining. It's no longer just a one industry city. Okay, I'll try and illustrate that to you now. So Perth is well positioned to deliver. Okay, now this one is all to do with trade. So Perth is one of the bigger, what we export out of Perth, I should say, is massive. Okay, and most of that is to do with mining. So what goes to China, and China is in very close proximity to Perth, as you can see from this map. China is Australia is one of the only countries in the world that is a net exporter to China. Most countries in the world are a net importer from China. Okay, they export less, import more. We are one of the very, very few countries in the world that actually is a net exporter to China. Perth is very well positioned in that sense. Now, I said that it's multi industry now. We've got mining, we've got agriculture, we've got manufacturing, and we've got tourism. All of those things feature very well now. And in terms of GDP growth, it's been growing really strongly. Okay, it's been growing strongly because it is the mining story. Mining story is very, very strong. Okay, so if you look here, GDP growth 2019 to 2021, China was leading the pack. A bit cheeky of Western Australia put themselves second as a state. So it is on the back of the mining boom that is still sort of going on. They're benefiting from it still. So here are some numbers in terms of what we're talking about. They contribute over 210 billion directly to the Australian economy. They employ a significant amount of people. Okay, they have a pipeline of over $140 billion of major projects. This is not small by any means. So like I said, if I'll just leave that there for 30 seconds. You can see that There is a big investment in the dairy area, agricultural area, farming area, in the aqua area as well, and area of processed foods. So all of this is creating employment. Now, in terms of infrastructure, there is quite a lot happening in Perth in terms of bringing the whole expansion of the suburbs and townships and connecting them very well with trains and metros and so on. So there's a $6 billion MetroNet rail project going on with 22 new stations and spanning 72 kilometers. So Perth's an interesting place because, this is Perth, close to the ocean. If you haven't been to Perth, it's a very pretty city. There's water everywhere. All around Perth, there is water. A little bit like Sydney, maybe a bit more water than Sydney. And then all the way up, it's all on the water, all the way to Yanchep here. And then you go down and you come all the way to Mandurah over here, okay? So where are the growth happening? Much like Sydney, you go southwest or northwest, you've got growth happening around here, and you've got growth happening around here, and you've got some internal areas having growth as well around here, okay? And as I said, there is not too far inland you can go, but these are all areas of growth. So where's the demand coming from? Okay. So demand is coming from population growth. Supply is extremely low. Okay. You can read these numbers faster than I can say it. Houses are selling extremely quickly. Okay. 13 days on the market is chronically low. It is definitely the lowest. Vacancy rates are at crisis point. So vacancy rates are at 0.3% in Perth. Basically, at 0.3%, you could probably say that there is no properties that you can rent, because there's a rental property in your suburb, there would be 30, 40, 50 people going for it, okay? So there's a lot of articles now on Perth. Perth is the flavor of the month for the last 3 months. And there's a lot of reports now, and I believe it 100%. The median price of a house in Perth is predicted to surpass 700,000 for the first time next year. This will happen, okay? There's no doubt in my mind. So here are the vacancies. So the vacancies at the beginning of this year, the national vacancy was around 1.1, 1.2, okay? And it's been coming down. So Sydney is now at 0.9. Melbourne's at 0.9. Brisbane's pretty low as well. But look at Perth. Perth and Adelaide always are making headlines in this space. There is just no properties, and you can't create apartments, you can't create houses overnight. The pace of growth of population is outstripping the pace of growth of the supply. And that trend is not going to be fixed for the next 3 years, causing enormous rental price pressure and enormous house price pressure, okay? So Perth is set to be one of Australia's fastest growing cities over the next decade. Between 2011 and 21, population grew by 19.6. That's a huge growth, actually, okay? A lot of suburbs in Sydney don't grow more than 2%. So that'll give you an idea. Forecast population will reach 2.5 million by 2030. That's a pretty decent growth, okay? That's a massive growth. So affordability, I talked about house prices before. So this is where Perth is. Perth is at 631 median value. And that has actually increased, okay? That has actually increased in the last few months because we've been selling. So this figure, ignore this figure here. It is incorrect as we speak. I haven't amended it. I've just put this chart in, but not amended them. But it still is almost half of Sydney's. Okay, it's creeping up, but it's still quite cheap compared to where Sydney is. So the point here is Adelaide was not so long ago around that 580. Now it's 700. Perth, as we said, was around 560. Now it's gone to 630. So when we started selling Perth about 4 or 5 months ago, we were looking at the prices And we were finding that as we sold properties and asked the developers to show us more stock, every time new stock came, it went up by about 15,000. So you can say that, you know, we've had 15, 30, 45,000 growth in the last 3 months. That is a massive growth. And there's no hesitation in me in saying that you will find the Perth price will go over 700. Any properties you can buy in Perth with a 5 in front, okay, you are going to definitely make money on that if you hold for a year. It will have at least a 6 in front of it, and potentially in 2 years it'll have a 7 in front of it. And that is why we are excited about Perth. That is why we are pushing Perth today, to give you that insight and to give you that ability to take advantage of it now before it's too late. In 6 months' time, it'll be too late. What else attracts people coming here? So if you look at the actual millionaires, the high net worth people, okay, HNWIs, high net worth individuals, where are they coming from and where are they going to? This is an important one to always be mindful of. It gives you some trend on where people are moving. So on the left here, no surprises, where people are moving from, top 10 countries, and where are these high net worth people? They could be millionaires, some of them could be billionaires. And where are they going to? So the number 1 place they're going to is UAE, and the number 2 place they're going to is Australia. So all Australian cities are actually benefiting from this. So the other thing is, when you're looking at demand, the highest foreign buyers, no surprise to any of you, I'm sure, the highest foreign buyers are still the Chinese. Okay, there's significant amount of money still flowing from China, and they are coming here in droves and also pushing the property prices up. Now, I know that there are Chinese fund managers, Chinese companies, large Chinese corporates, large Chinese billionaires who are got their scouts in Australia, who are actually looking to invest significant amounts of money in property. Okay. So I have met at least 2 or 3 of these people, and they have budgets of anywhere above 500 million up to 1.2 billion, the people that I have met. So, and that's the people that I have met, but there are so many of these people who are literally here every day looking for properties in your suburb, in other suburbs, in other cities, every single day. Okay, and this trend is going to absolutely continue for the next 2 years. So the local demand is there, the foreign demand is there. Non-residents can buy properties here through a FIRB approval. Indians can buy properties here now without having to pay penalty stamp duty. All of those things are, the needle, moving the property price needle, okay? And this one, again, an important one. So dwelling completions are coming down. On the other hand, you've got the actual demand for property, population change actually going up. And this will probably keep going. So this is a lag, okay? You can't create demand. Maybe somewhere by 2027, 2028, we might find a bit of equilibrium. But in the next 3 years, you are this scenario, high demand. Could you please stay on mute? Thank you. So you are going to experience for the next 3 years very high demand continuing and very low supply continuing. So there is no better time to be buying property. And one of the things we do at Nivas is we will never, ever, ever ask you to buy at the top end of the market, where there is top end of the market, and we will never ask you to go and spend $1 million to go and buy a 2-bedroom apartment. Doesn't matter where it is. We ask you to, the biggest bang for your buck is buying where you're getting the biggest bargain and at the price range which will give you the biggest potential for your capital growth. Okay. And that is why I am saying if you can buy something with a 5 in front of it or very close to 600,000 in any part of Perth, in a growth part of Perth, that is not going to stick around for long. Okay. You will, in a very short space of time, you'll be looking, and I've been doing this for some of my clients now. We've been looking for properties in Southeast Queensland, and they said, listen, my budget is 600. Can you find me something in Southeast Queensland? We have looked long, hard, everywhere in Southeast Queensland. We cannot find anything around 600. Forget 500. Okay. So there is no chance. And the same thing will be repeated here. Everything is pointing that is going to happen, right? The time to take advantage of this is now. Because we have seen, next time we go to developers, in a month's time, we will go to developers and the price will have gone up another 20,000. So when you buy an investment property, you got to look for location, number one, very important. You got to look for population growth. I'll let you read all of that, okay? You got to tick the boxes. If you can't, for us, if I personally in my research can't tick 8 out of the 10 boxes, I'm not going to recommend the property to you. So we got to tick these 10 boxes, okay? Happy to share that with you. Now, there is this beautiful suburb south of Perth called Mandurah. And Mandurah has a number of suburbs there. We have one property that to showcase to you today that I will actually get my colleague Krish to take over from here, and he can talk you through this. Not many slides to go
Thanks,
now.
Sachin.
Yep, thank you.
No, appreciate it. Hi guys, it's Chris here from the Nivas sales team. Now, look, first and foremost, thanks, Sachin. I mean, all the information is provided is completely spot on. Now, one thing I wanted to sort of get out from the onset is that when we choose properties, we pick the right locations. We make sure that we're sourcing land at the cheapest price. We get builders who are the best price, who are, financially viable, stable builders who build a good product. So we're basically, that's how we choose our properties. And this Perth is no exception to that. So we value picked 2 fantastic locations. Now, the first one here is in Mandurah. So Mandurah it's south of, it's roughly about 50 minutes from Perth, south. It's the second largest city in Western Australia as well. And it's an area of huge growth. There's a lot of new population coming in, a lot of infrastructure, and the specific suburb that we're actually looking at the moment is called Lakelands, right? So Lakelands, one of the biggest, I guess, the main points about this area is that you've got a lot of infrastructure such as shopping. You've got the train station very close by as well. You've got all the necessities and amenities that you need for living a good life. And just bear with me for one moment. My sincere apologies. Yeah, so sorry about that. So this is, I guess, the first example, a lovely area. Vacancy rates here are sitting at about 0.4%. So as Sachin mentioned, it's a testament to the fact that vacancies all across Perth are very low. But the good thing here is you've got a fantastic demographic living here as well. You've got, more sort of white collar professionals. You're very close to the water as well. So it's a fantastic spot. It's a very, very good location. And look, the house that we're looking at the moment, it's 163 square meters, 250 square meter block of land. And you're getting that as a turnkey package of 523,342. Now, the rent that you'd be anticipating from that is about 600 to 650 per week. However, that is increasing. In all honesty, every 3 to 4 weeks, rents are going up there. So it ticks all the boxes from an investor's point of view. It's a lovely subdivision. What we pride ourselves on in Nivas as well is 90% of people we've sold to have bought from us interstate. So people who live in Sydney, basically, they purchase from us in Perth or Adelaide, and we take care of the whole sort of build end to end remotely. We keep you updated with progress. We do all that sort of thing. And yeah, it's a very seamless process. So this is just a quick look at the house. It's a very, it's a very nicely built home. You've got a 4-bed, 2-bath, 2-car configuration. It's a Hampton style design as well. So look, you've got a lovely big home here as well. Sorry, my screen's just playing up. Bear with me. Yeah, sorry. Next slide. Sorry, Sachin. Thank you. So basically, this is a look at the next suburb that we've got, which is in Ellenbrook. So Ellenbrook is about 30 minutes from Perth. It's northeast of Perth, this particular suburb. There is a lot going on here. So you are nearby to a upcoming train station. There is talk of a new university, which is coming up in this suburb as well. The population growth is earmarked as one of the highest growing populations in Perth. And I guess that's a testament to the fact that they are putting a university in there potentially. They're putting a train station in there as well. So it's a fantastic location. It's in the city of Swan, which is a lovely council area within Perth. And this particular home you can get as a turnkey package for 601,540. Okay. Now, the rental yields that you're getting here at the moment, my apologies, we don't have that on the screen. You're getting anywhere from 680 to 720 in rent at the moment. You can look at real estate and have a look for a new 4-bed, 2-bath, 2-car home. That's what you're getting. So your yields, again, are very, very strong. You're in an area with, I think, 0.38 or something percent is the vacancy rate here. And another fantastic option, right? Sorry, Sachin. Next slide. Thank you. So there's a couple of case studies here which Sachin is.
I'm happy to take this. I'm happy to talk to this.
Just before you do, I just wanted to just have a quick one. Guys, there's a lot of talk about existing homes and purchasing existing homes, and there is a lot of merit in that, definitely, right? But if you're not looking at a brand new home, you are also doing yourself a disservice, right? Because I'll give you an example of Schofields in Sydney, for instance, right? In Schofields, you can get a older home on a 500 square meter block for about 1.2 million. Or you go to one of the newer subdivisions there, and you've got a 500 square meter block with a brand or newer home, which is near all the infrastructure, which has that better white collar demographic, which is selling for right now listed for 1.68 as a guide, right? Both in the same size block, the same suburb, right? So my whole thing here is that while there is merit in existing homes, there is also a lot in brand new as well. And we've proven that time and again with every state where we've, I guess, pushed our investors to go. So please don't disregard the brand new space. There's a lot of good opportunities. And as I said, we make it a very seamless process for you. So over to you, Sachin. Thank you.
No, that's okay. I just want to illustrate here that some of the distances, because one of the questions I got when I first did a presentation on Perth, probably about 4 months ago, was that there is, Mandurah is a good 70 kilometers away. We were doing north as well in a suburb called Yanchap. And that is, again, a good 45, 50 minutes away. So just to illustrate the point of proximity to a major city. So if I take Sydney, for example, we go 1 hour and 22 minutes to get to Wollongong. Okay. The median prices in Wollongong 10 years ago, 458, today 1.3 million. Take a similar example from Melbourne, all the way down to Mornington, okay? 10 years ago, Mornington price 491, today 1.34. Take another example in Adelaide, okay? Traveling all the way up here, and this is where we were selling most of our properties in Adelaide, around the Manor-Para area. Gola, 10 years ago, 295, now 470. Another example here is Redcliffe in Brisbane. So you're traveling all the way here, 41.6 kilometers to Redcliffe. 10 years ago, 449, now 1.08. So people generally ask me, and I get a lot of times people ask me, they've stopped asking me now because the prices have actually started to come down about regional areas. And I have never been a fan of a regional area. In the last 42 years I've stayed here. There was a big jump post-COVID in regional areas, particularly suburbs which were close to the water. Away from the water, I would say the number of suburbs that or townships that have gone up in price are not significant at all. Okay, so, and now the prices are actually falling in some of the regional areas. And secondly, I would say the rentals are also falling in some of those regional areas. So number one point again, supply and demand, population growth. Without population growth, you can forget about property prices going up. Okay, that is the single most important factor. I will stop there because I've gone a little bit over time. My concluding comments, as always, is please don't blindly follow the media. They will publish what makes headlines. Do your due diligence. You know, you spend $500,000. It is not something you spend every day. You don't want to come back in 5 years or 10 years time and say, oh my God, you know, I should have spent that 500,000 somewhere else and I would have got a bigger bang for my buck. You don't want to be in that position. So buy in the right place. It's not just about the right time, right place, right time, but also right price. Have a long-term view when building a portfolio. People, you know, there's still some people who don't invest. And I always do one-on-ones with them for free. Of course, I don't charge, but I have done this successfully. Okay, I've been doing it for many years, over 40 years, and I have bought interstate. I have bought in Perth. I've done purchases in Southeast Queensland, of course, in Sydney, and I can tell you that there's nothing too difficult about building a property portfolio. And when at COVID time, when the interest rate went down to 0.1% and banks were only giving you a maximum of 0.5 to 1% for your money, I was saying to people that if your house was paid off and you had $1 million in the bank, that at 1% interest rate, you're only going to earn $10,000 a year. Okay. Even at 2%, even at today's interest rate, at say your bank gives you 5% today, at 5% interest rate, you are still only going to earn $50,000 on your $1 million. Is that enough to retire on? Most of you would say no. So my point to you is you've got to accumulate property. You've got to have an investment portfolio. And it is not difficult if two of you are working and got a decent job and a decent salary and you are in your 30s or your 40s. I can tell you that there is no reason whatsoever why you cannot build a strong portfolio of double-digit properties. And I'm talking about 10, 12, 15 properties. Okay, there's no reason whatsoever. That is not reserved for the very wealthy people, I can tell you. And that's where I come in. I'm happy to do a one-on-one and talk to you and show you how that can be done. Okay. I will stop there and take any questions. Sorry for going a little bit over time.
No, feel free to ask any questions. No such thing as a silly question, everybody. So you can write it, can say it, anything that you like.
Yes.
Apologies, before my screen was playing up a bit. Now it's all good.
Okay, any question? Don't be afraid.
Here we go.
How can we buy multiple dwellings? Sorry, missed that. Earnings, will the serviceability? Yeah, listen. Yeah, no, good question. So listen, there's I'll give you a very short answer, okay, at this stage, because there's going to be lots of other questions, presumably. But how do I get remunerated? Okay, I'll come back to that. Listen, building a portfolio doesn't happen overnight, right? So you buy so you can build equity. So I give you a very simple example. We sold a property in Perth about 6 months ago, Krish.
Yeah.
And that person who bought from
July.
us is July. That person who bought from us is already sitting on what sort of equity?
About 45. Yeah,
Okay.
about 45 at the moment.
Now, in another 6 to 12 months, that figure will double again. So it'll be at least 100 plus. So as soon as you have sufficient equity, okay, and as soon as you can afford a property in the right place and buy it at the right time, you should get in and do that. That's one way, okay? The other thing is that you can buy apartments. We do apartments as well. You can put a deposit on an apartment, and I can give you a lot of examples. So I can see a couple of names here who have bought apartments from us in Sydney. So if you've bought an apartment for, say, $680,000, I'll give you an example. We're selling in Tallawong Village at near Ponds, right next to Tallawong Metro. We were selling there at around that 680 to 700,000. Okay, the new building has just been released there, and the prices for 2 bedrooms are now 800,000. So that is an instant equity for those that they haven't settled yet. The settlement has been delayed a little bit. It's going to be around second half probably of this year for some of those people who paid around 680 to 700.
3-month delay, yeah.
Yeah, so there's a delay there. But they will be selling their apartment, indeed, if they sell, but they will have an equity of at least 100,000. So how did they build this equity? Because they bought at the right place at the right time. So you don't have to. So if you buy an off the plan property today and pay 10%, and the property does not settle for another 3 years, well, in 3 years' time is when you're going to have to borrow. I'm not going to sell your property if I think you cannot borrow the money in 3 years' time, okay? My job is to make sure you keep building equity in your property. So the idea is that one day you're going to have $5 million of properties, or say $10 million of properties. So if you have $10 million of properties and you get a 10% increase in 1 year, that is $1 million for doing nothing. Okay. That's the mantra I am trying to teach. Okay. And I can tell you a lot of people who made that $1 million, or maybe some of them $2 million, doing nothing when property prices went up 20 to 25% in 2021. Now, that doesn't happen every year. Some years you might only get a 3% increase. Some years may be flat. But there are going to be those years where you're going to get 8% and 10% and 12%. Okay. So listen, that's a short answer. I'm not gonna everyone's circumstances, disposable income, and other things are different, but I'm more than happy to sit down with you and show you how it's done. Okay. In that is what I'm more than happy to do, and I enjoy doing at this stage of my career. I do not charge for that. Somebody did ask how I charge. Listen, if you don't buy a property from me, it's okay. We are not a pushy agent. We are there to assist you to build wealth through property. Okay, that is our mantra. If you buy from us, well and good, but there is no proviso to do that. Next question, Krish.
So you've answered the serviceability. Great presentation. How do you get remunerated? That's all good. Packages you shared will be ready in 2024. So Sumit, the packages that we sent, there's varying registration. So the Ellenbrook one, I believe, would have been Feb, if I'm not wrong, and Lakelands is a little bit earlier, but I'll double check that. But we have land lots registering, I guess, in different dates all across different estates. The issue that we're having at the moment is that sourcing land there is getting harder for investors, because the first thing that the land developer asks you is, which state are you from, right? So if I say New South Wales, excuse me, my dog's just there. If we say New South Wales, then what happens is they say, okay, well, they'll give us selected blocks, and in some estates they won't even give us blocks because they're reserved for locals, because there's just not many listings there at all. So yeah.
We had that in Adelaide as well. At some subdivisions, they were not giving it to any investors because of the acute shortage.
Yeah.
So that is the other reason that is pushing the prices. Just the local demand is so high.
Yeah.
But we are there to source from the developers that we use. Yeah.
Yeah, perfect. Now, from Anand is asking, most of the builders are going bust, so is it not risky to buy a house and land package?
I would remove the word most. Okay, so yes, we have had the highest number, I suppose, for a very long time of home builders actually going into receiverships in the last potentially last 2 years. The key thing I say to anyone that asks me that question is that there's still more than 95% of the builders who haven't gone broke. Okay, those 1 to 5% who have taken undue risk and could not sustain the price growth in their fixed price home and land packages, leveraged and exposed themselves, have not survived. But whilst the number of ones that have gone under, the percentage is not high. Okay. The second thing I will say to people who are afraid of doing a house and land package is a house cannot be built without an insurance. So in the worst scenario, the insurance company will take ownership to ensure that your house is completed. What that costs you is time, and time is money. So if your house is delayed by 6 months, or indeed it could be 12 months, then you would have cost of funding on the deposits that you have paid and progress payments that you have paid. You'll have interest cost on that for that period. Okay. Nobody can take that home away from you because there is an insurance company behind you that stands behind you and makes sure you are delivered the house that you purchased. Okay. And those insurance companies are not overnight small companies that will disappear. They are normally large companies, and they're reinsured with very large companies. Okay. So, which are overseas. So I would just say those two things. I can't put doesn't matter how much due diligence I do or anybody else does. And I work with a lot of developers in Sydney, and I'm on the advisory board for some of these developers, and I provide a lot of advice and do a lot of financial analysis for them and make predictions for them as well on what to buy and not buy. And they are land developers, and they are also apartment developers. Okay, but I have been surprised at some of the bigger companies that have actually gone under. So I can't put my hand on my heart and I say, no, this builder is never going to go broke. I can't say that. I cannot say that because that can and does happen. But what I can say is that the chances of that happening is very low, because even though the number of builders that have gone down, the percentage is still quite low. I hope that answers your question. If people still build homes every day, and people still get delivery of their homes every day. Okay, yes, the bad news gets publicized and it's in the news and so on. There are still few and far between, because I'm pretty sure 95% of the homes are still getting delivered.
Yeah.
Okay.
And just to add to that, look, out of all of the builds that we've done, and we've done hundreds of builds, we've never had anyone that's gone under, right? Every one of our builds have been absolutely touch wood, right? Yeah. I'm just saying, right? Touch wood. No one has gone under. We've been very blessed by way of fixed price as well. So while it is impossible to say that, look, every builder is going to be perfect, we still take as much care as we possibly can to ensure that, we give the clients the best experience. And by that same measure, I mean, there's a lot of people who have bought existing homes who are in a lot of financial stress, which Building and Pest didn't pick up. And you know what I mean? So there is, there's pros and cons for both, I guess. So
there's definitely pros and cons.
Yeah.
I mean, you get a warranty on your new home as well. So anyway, that's
perfect.
That's We'll take the next one. Thank you.
Awesome. No worries. So Storm, since Perth has already written so much, is there any growth left? Why would people choose Perth over Melbourne and Sydney in the long run?
Perth is still the most affordable city, arguably, in Australia. And you've seen the demand and the acute shortage of supply, and why rents are going up every day. Soon their rentals will be probably higher than Sydney's rentals. I mean, this is likely, okay, the way things are going. So the media also picks up all of this bad news, people sleeping in cars and all that kind of stuff. So this trend, as I said, is not going to be fixed overnight. And what you are seeing is the start of that cycle. So if I did not believe what I said, and that is that you potentially will see 100,000 growth on those numbers in 1 year, then I wouldn't say it. Okay, I have had a lot of runs on the board, and my predictions, for those of you who may not know, my predictions have been right at least 9 times out of 10. And that's because of the research we do and the experience I have had, seen about 7 property cycles in Australia over the last 42 years. So you can believe the media, or you can believe, you can go with your common sense. And I think everything I hopefully have said today is if you think about it, most of it is common sense. You won't find properties in any city in Australia soon for under 700. It's just a fact of life.
Thanks, Sachin. Okay, so next question. Given land prices are reasonably cheap, wouldn't it be reasonable to have a dual key property, as that will attract a proposition with 2 decent incomes? Now,
You can do that, yeah. I mean,
you can do that, right? The thing that's happening in Perth and what happened in Adelaide as well is that dual keys, estates just stopped doing or giving access to a lot of dual keys, which is a bit sad, but it was harder to do dual keys. They weren't approving them as much. That's the first thing. The second thing is, what happens is when we do dual keys, we try and get in as early as we possibly can, right? So we get in as early as we can to ensure that, build costs aren't exorbitant and, valuations stack up and that sort of thing. But what happens is when a market starts to run a bit, right, when it starts to go higher, so say Brisbane a few years back when it started to have that upward trajectory, you get some builders who start to get a bit greedy and tack on extra costs to their due. Not all builders, but some builders do that. So that could skew, valuations and things like that. So
yeah,
I guess dual keys, yeah.
I think the other factor is the valuation. So
yeah.
So anyone looking for dual keys, so we were selling dual keys a few months ago at around that 680 to 700.
Yep.
We can source you those
Cheap
dual
ones.
keys. Okay, we can source you those dual keys, and you will get rentals of over $900. What I will caution is the bank might come and actually value that not at 680 or 700. The bank might value it at 630 or 640 because they'll say this is just like another house with an extra couple of bedrooms, right?
Yeah.
So what I say to you is be prepared for that and have additional equity in case that happens. I encourage people, actually, if you want to buy dual key and you have got extra capital to compensate for any valuation issues, then absolutely go for it, because your return is absolutely brilliant at the moment in Perth. We sold dual keys in Southeast Queensland for 480, okay, a 3 and a 2. And they're now 850. They're 850 in
3 years ago.
2.5
years ago. Yeah.
So listen, there is nothing wrong with it. There's nothing wrong with it, and we can source them for you. You might start paying a slight premium on that now. But we can take that offline if you're interested, and we can look for those properties for you too.
Definitely. Thanks, Sachin. All right. Okay. Now, how is Mandurah and Ellenbrook compared to Yanchep or other? Yanchep's a fantastic location as well. We've sold quite a few in Yanchep. It's near the golf course. It's near the water. It's got a very tight supply. It's got a very, very good demographic. So 100% Yanchep is a fantastic option too. No question. No question.
That north part, see, you can only go north or south, and then
South.
You're very, very close to water. Yanchep is good. So they had I can tell you that about 7-8 years ago, the halfway to Yanchep is a suburb called Joondalup.
Yeah.
And Joondalup had a very strong population growth, and most of the people settling in Joondalup were coming from the UK, and they had good jobs and they had good disposable income. Okay, and they liked the fact that it was close to water and all the amenities. Now Joondalup has had this big, and I know Joondalup really well because I was with HSBC at the time, and we actually went and opened a branch in Joondalup. And HSBC only has 40 branches in Australia, so opening one in that township was a big deal, right? And then City came and opened a branch there as well. So that whole now Joondalup's really gone up in value. So people are moving further north and further north. That's where Yanchep is benefiting from that move, and all the infrastructure is now going in, and it's got the train and everything else going, the highway and everything else going for it. So listen, both sides, south or north, are good. The trick is you must not pay a premium. Pay a good price. This is definitely an area of significant growth.
Thanks, Sachin. Next one is from Sandeep. How do you see Townsville for future capital growth? Townsville is mostly
listen. Townsville is a mining place. Okay, it's a whichever way you look at it, it's a port. It's a mining place. Am I talking about the right place?
Queensland, Townsville. Yeah,
yes, Queensland, Townsville, on the water, right?
Yep, far north. Yep.
Yes. My problem with that place is demographics. And there has been a lot of issues with tenants. Wherever, I mean, I hate to say anything that sounds racist, but there is a large Aboriginal population there. And I have had a lot of not so good stories about tenants there and the amount of theft and crime there. Coupled with that, there has been, I think, flooding and natural disasters there. All I'll say to you is there are better places. Okay, it's a question of where you're going to get your biggest bang for your buck, and it is not in my top 5 places to invest in Australia.
Thanks, Sachin.
Stop there.
Okay, now is growth in Southeast Queensland on par with growth in Perth?
Yeah, very, very good question. Who asked that one?
This one is from, bear with me, Danny.
Danny, excellent question. We debate this a lot. I cannot say anything negative about Southeast Queensland. Okay, even at today's prices. So our next seminar webinar may well be on Southeast Queensland, and I think Southeast Queensland, even though it has had that strong growth already, there is significant amount of growth between now and the next say 7-8 years, and that's again because of infrastructure, because of population growth, partly and very small partly because of Olympics. The Olympics thing is always overdone. Okay, it's definitely overdone, and the Olympics is going to be held not in one place. It's going to be held all over Southeast Queensland, even Gold Coast. So don't believe anyone if they say, well, this particular suburb is going to go up astronomically because of Olympics and Olympics only. The story is population growth. So number 2 at the moment for me is Southeast Queensland. Okay, definitely, and we can source you good properties in Southeast Queensland as well, where we travel frequently and keep sourcing. So my number 1 right now is Perth, but my number 2 is certainly Southeast Queensland, because the price point is still. So if you look at the growth in the $1 million suburbs, and we saw this in Sydney, right? So, like I keep saying, I've been here a very long time, and if you told me that so many suburbs are going to be all $1 million suburbs in Sydney, I wouldn't believe you a few years ago. But it has all happened. Doesn't matter how far you go now, they're all $1 million suburbs. You know, Austral, a house and land package in Austral is $1 million plus. So it's all $1 million suburbs. So the number of $1 million suburbs has doubled in Southeast Queensland. And the number of $1 million suburbs is going to triple and quadruple in the coming years. So if you're buying something there for 700, they are going to go to over $1 million. You just have to hold for 5 or 6 or 7 years. Okay, so it's a no-brainer. I mean, it's property, and I talk about growing your portfolio. There is, if you are able to, you should buy one house and land package in Perth. There is a good house and land package that you can source in Southeast Queensland. They both are going to do extremely well.
Thanks, Sachin. Another question. So what is your view on Mount Gambier in Adelaide? Guys, one thing, Mount Gambier is not in Adelaide. It's a couple hours drive, and second
South Australia.
biggest. South Australia, yeah.
Listen, Mount Gambier is the
second biggest city.
I am no expert on Mount Gambier, so I'll make that very clear from the outset. But I would ask you to do your research on the population growth that is coming there. You saw the 10 boxes that I had. Okay, the 10 ticks that you got to have. If it ticks more than 8 of those boxes, please go for it. Okay, so I'm talking about population growth, talking about infrastructure and infrastructure spend. Please go and do your homework on these 2 numbers. And what else is coming there, right? If it ticks 8 out of the 10 boxes, go for Mount Gambier. But it certainly is not in my top 5. I mean, and I'll make it again. I'll say I'm not an expert in Mount Gambier. Okay.
Yeah. Awesome.
So you will property prices grow there? More than likely it will. Have property prices already grown there? More than likely it has. So it is whether you can have, you know, your property price double in the next 10 years. I have no idea.
Thanks, Sachin. Okay. All right. Now, next one is from. Okay, AB. Can you buy in Adelaide for 500 to 600? AB, yes, you can. We can. There are definitely some opportunities there, but those opportunities are becoming few and far between. That's the thing. So definitely you can. We can source them there.
We can try and source there, yeah, for sure.
For sure, 100%. Now, Harshit, where do you see higher capital growth out of these 3? If you can get a house and land for 600K out of these 3 cities, which one would you buy? Perth, Adelaide, or Melbourne West?
Good question, Harshit. Again, I mean, it's what price point you would be buying, and where you would be buying. I would say my first pick out of those 3 right now would be Perth.
Perth, yeah.
West of Melbourne has got potential for good growth as well. Depends on how far you go, but an infrastructure is slowly coming in. But for some reason, Melbourne has not been in my top 5 areas for investment, certainly in the last 5 years. And there have been some good reasons for that. And one of those reasons is I do not like the government policies there when it comes to investing in properties. And we can, Harshit, we can explore. You probably already know, but we can be more explicit if you want to call us to have a chat. And yeah, I mean, yes, I would say Perth at the moment. Yeah, for short answer for you is Perth out of those 3, because Perth is due for a bigger run than what Adelaide's had a very good run. And I think Perth in the next 12 months to 2 years is probably going to have a bigger run than those other 2 places.
Thanks, Sachin. Next one is from Madhav. I live in Melbourne and I have a land which is in Perth, 9 km from the CBD. Where I can build 4 to 6 townhouses. I need help with this as I'm not a local. Do you help with this? We need townhouses built and sold. 100%. Yes, we do assist with this.
Congratulations, well done.
Yeah,
yeah,
definitely well done.
You've done extremely well there. We can certainly, we have access to developers who can help you with that. So please touch base with us, and we will point you in the right direction.
definitely. We'll organize a chat with, well, actually that goes for everyone. We can organize a chat with Sachin and go through more intricate details about your scenario and help for sure.
Sure.
Now, Ajit's note 8, would you share location on maps? Ajit, what I'm going to do with that, I'm going to be sending everybody who registered a email with the packages, with all the information, so you can process that. That'll be with you by tomorrow morning at the latest. Okay. So, SCV, what is your opinion on buying an old house on a large block of land in Perth, which can be rented with the potential of subdivision? Seems like a tick all the boxes. Good.
Whose question is that? Sorry.
SCV.
Okay. Listen, good question. And if you can find a good location, a good size property at the right price, you probably at this type of market, you're probably not going to get a bargain. Do your sums, do a full feasibility. Okay. I find a lot of people, they do not do a full feasibility when they're looking at a subdivision or building 4 townhouses and so on. And there's when I look at their feasibility, I always pick holes in them. So you've got to, and I do a lot of feasibilities for property developers, okay? And I've been doing this for the last 5 years. So I would urge you to make sure that you get an expert to look at your feasibility. Make sure you talk to the local council about the council contributions that have to be made. All of that research that you have to do, please do it with the dotting the I's, crossing the T's, and get an expert, local expert there to assist you in that. But absolutely, you should look at that. Yeah, do your homework, do your due diligence before you make the deposit to purchase.
Thanks, Sachin. Okay. Milind, is Southeast Queensland a good option for property investment via SMSF?
Yeah, why not?
Yeah, definitely. Good yields, still relatively well priced. Yeah.
Whose question was that? Sorry.
This is for Milind.
Milind, please give me a call. I don't mind talking to anyone listening who may be wanting to look at investment opportunities from their SMSF. I do run a fund management company called Nowest Funds Management. That's NORWEST Funds Management. You can Google the company. There are a number of options out there other than buying properties that you can look at for your self-managed super fund. But happy to have a chat, Milan, and happy to source those properties for you too. The thing with buying a brand new property, which is from a self-managed super fund, is it has to be a single contract. So single contracts, properties have to be funded. The build has to be funded by the developer, and they pay the stamp duty, therefore, on the land. So because it is a single contract, it actually costs you more to purchase from an SMSF. That's the first thing I will say to SMSF. You'll say, well, why am I paying more for this? Because it's a single contract and the developer has funded it. The second thing with the SMSF is your LVR to purchase something is normally lower, and your interest rate is actually higher. Okay, so there's a few things about buying properties through SMSF, which we are going to do an education webinar soon as well, so we can cover some of these things in that. I can have a financial expert to join me. But please do call me and we can chat more about potential investments that other with other products other than buying a property in SMSF.
Perfect. Thanks, Sachin. We've got one from Pratap. Can you share your views on Melbourne West?
Pratap, to be perfectly honest, I am not an expert on Melbourne West, but I know a lot of people that have actually invested in Melbourne West and have done very well. So if you have some specific suburb that you want us to investigate, we work with a few developers there and a few experts, property experts there. We would be happy to actually get you some more specific answers with something you may be looking at.
Definitely.
And the reason why
Thanks.
I'm not an expert is because, like I said, the last 5-6 years, we haven't actually been pushing. Melbourne has not been on our radar for a number of reasons, and I'm glad that it wasn't, because most of our buyers have done well in other places, including Sydney.
Correct. Thanks, Sachin. Okay, now, thank you, Harshit. Thank you, Milind. AB, so AB is just asking, we spoke 2 years ago about the fixed interest investment via Norwest funds. Do you still do that?
Yes, we do, AB. Absolutely do. Please give me a call.
Perfect. And that was it.
Okay.
Now, what I'm going to do, everybody, I'm sending
our numbers,
an email.
I can put my numbers up. I can put my numbers up there.
I'm going to text everyone after this.
You will? Okay.
Yep. Everyone gets a text. Sorry to spam you guys.
Okay. Otherwise, I can share it. So the numbers are up here.
Yeah, I'll just take a screenshot. Yeah.
Yeah.
Perfect. But no.
Thanks everyone for listening, and hopefully you found this insightful. The offer is open if anybody wants to call us. Book a meeting if you want, or do a Zoom call. More than happy to assist with your questions. Where we can help, we will help.
Yeah. Thanks, Sachin.
Thanks again. And take care, everyone.
Oh, sorry. One more quick one from Deepak. How's Port Kennedy and Baldivis in Perth? Deepak, in a nutshell, they're both good, but give us a call and we'll go through it in more detail for sure.
Yeah, both very good suburbs.
They're both good. We've solved. Yes, give us a call.
Absolutely.
And I'll send you a text after this anyway. Okay.
Yep.
Thanks very much, everyone. Have a lovely evening.
Everyone. Thanks again. Have a good evening. Thanks for listening.
Bye.
Thank you, guys. Thanks, Sachin.
Thank you.
Thanks, guys.
Bye.
Thanks. Bye.